In the last video, we saw what a bank reconciliation statement was, and we went into the first case in which we started the problem starting with the cash book. Now, we will solve another problem of case 1 where the starting balance is favorable as per the cash book. Okay, so let's get into the problem. Okay, from the following information, prepare bank reconciliation statement as on 31st March 2015. They have given us the balance as per the cash book as on 31st March 2015. Here I have already created my pro forma. We have to prepare the bank reconciliation statement. They have given us cash book balance. They have given us bank statement balance as well. So I will start with my cash book balance. Balance as per cash book debit. It's a favorable balance, remember. ₹12,000. So I will put it in the plus column. Out. Then next they have given us balance as per bank statement. So with the next 3 transactions that we do, we should be able to reconcile the difference and end up at the figure 15,600. Let's see the third transaction. Out of the total checks amounting to rupees 10,000 issued, checks aggregating, okay, see the word they have used is issued. Checks aggregating rupees 3,000 were encashed in March, checks aggregating rupees 4,000 were encashed in April, and the rest have not been presented yet. Okay, so this is a case of checks being issued but not yet presented. Checks worth rupees 10,000 were issued, okay. But only checks aggregating rupees 3,000 were encashed in March. We have to create bank reconciliation statement for which date? 31st March. 31st March. So I'm concerned with transactions which happen in March. Now next 4,000 rupees checks were encashed in April. So rupees 4,000 April, and the rest 3,000 not presented yet. So in my books I have, what have I done? So in my books I have issued checks worth rupees 10,000. But actually from that 10,000, how much has been encashed? How much has been presented? See, only checks worth rupees 3,000 and 4,000 were presented. The third check of rupees 3,000 was not even presented yet. And this 3,000 rupee check and this 4,000 rupee check, out of these two, only this check has been encashed by the receiver. This 4,000 rupees check was encashed only in the month of April. So that means in the month of March, only 3,000 rupees got deducted, not 10,000. What does that mean? Our balance, cash balance, is less by rupees 7,000. Our bank balance is more by rupees 7,000 because only this 3,000 rupees check in the month of March has been encashed and not these two. But the account holder, the accountant, has recorded that entire 10,000 has been deducted. So our cash book balance is less, right? And what do we do when our cash book balance is lesser than our passbook balance? We add it. Okay, see, so this is my passbook and this is my cash book. In my cash book, I have deducted 10,000 rupees. But only 3,000 rupees has been deducted in my passbook. So there is still a difference, no? If I want to tally it, what should I do? I should add the remaining 7,000 to my cash book to equalize. So let's do that. So here I'll write my add items and here I'll add my less items. Checks issued but not yet encashed. Rupees 7,000. Okay, let's go to our next transaction. Out of the total checks amounting to 5,000 deposited, checks aggregating rupees 1,500 were credited in March and the balance checks were credited in April. Okay. Okay. So what has happened in this case? I deposited checks worth rupees 5,000 in the bank. Out of this, only rupees 1,500 got credited in March and rupees 3,500 got credited in April. But my bank reconciliation statement is for 31st March 2015. So I am only concerned with those transactions which happen in the month of March, not April. In the month of I have see in my cash book I recorded in the month of March I have received checks worth rupees 5,000. So I have recorded entire 5,000 rupees in my cash book. But what happened in my passbook? In my passbook, only the check worth rupees 1,500 got credited. Only that amount got encashed. The rest 3,500 got credited in April. So that means in for the month of March, my passbook balance is lesser than my cash book balance by rupees 3,500. In my cash book, see, in my cash book I have recorded full 5,000. But in my passbook I have received a credit of only 1,500 rupees. So what is the difference? 3,500, right? This 3,000, so my cash book is 3,500 rupees more than my passbook. Now if I want to equalize the two, I have to deduct this 3,500 from my cash book so that both of them are equal. My cash book is more, my passbook is less. Now if I want to equalize the two, I have to reduce my cash book. So in the bank reconciliation statement, I will write checks deposited but not yet credited 3,500. Bank has debited 300 rupees as bank charges and has credited 200 rupees as interest. Okay. These are transactions that have only been recorded by the bank and not by the account holder. So bank charges rupees 100. What does that mean for us? It means that our cash book balance is more by rupees 100. In our passbook, 100 rupees has been deducted. So we have to deduct that in our cash book as well. So in my less items, I will write bank charges. 100. See, whenever you're given any transaction, first what you do is you analyze, is my cash book more or is my passbook more? Now in this bank charges case, my 100 rupees has been deducted from my passbook. In this, see, now in this bank charges case, 100 rupees has been deducted from my passbook. So if I want to equalize the two, what should I do? I should deduct 100 rupees from my cash book as well. And similarly, for this 200 rupees interest that has been credited, my passbook balance is more now. My passbook balance is more. So if I want to equalize the two, my cash book balance also should increase by 200 rupees. Got it? So this bank interest I will add. Bank interest credited rupees 200. Okay, so these were all the transactions. Let's look at our balance. Let's compute this. Balance as per passbook credit. So rupees 12,000, rupees 12,000 plus 7,000 plus 200 minus 3,500 minus 100 gives me 15,600. So I'll write here rupees 15,600. And what was given in my question? Balance as per the bank statement was also 15,600. So this was the case in where we are starting with a favorable cash balance, that is a debit balance, and we are starting with our cash book balance and coming to our passbook balance. Now in the next videos we will be solving problems wherein we will be starting with our passbook balance and the passbook balance will be favorable. So that's all for this video. See you in the next one.